Good morning, good afternoon, and good evening to you all, wherever you are joining me at this hour. Welcome to 136th edition of Investdata Trading Academy live with Ambrose. Yes, the market this morning is a bit dicey again. No, we'll see a mixed market across the globe. Before I go further, I said this is the time for you to play with your protective word stop loss and take away emotion in any of your investment decision you are doing. I know that your trading plan has entry and exit strategy and your profit target will also guide you. But when you are taking decision, please always put your word to your stop loss. Take away emotion when you are what trading. Trading is about what looking at what is happening and taking decision. You don't need to add or assume. Assumption will might also lead you. So, but what you are seeing as people are reacting at their psychology will play in that direction. Also, your chart will also guide you to know exactly what to do when it comes to trading. Here, always put your word, your stop loss is very, very important as you speak. Globally, stock market open midday week trading, on a mixed note after the hotter than expected, U.S. Inflation data or report were made available yesterday to the market. I know when that result report came to the market yesterday, I would say that it was a blow across the globe. All the stock market moved into red immediately. But the good thing is that this morning we're seeing some of the market also rebounding back. And that is why today we're looking at one also aspect of a chart that you also consider because it's very, very important too. But as we speak now, the global market are mixed. And also because of the rate hike yesterday, we're expecting that the Fed will also increase rate as speculation is being fueled with this outcome of outcome of the data. I told you earlier that this is another important data that will determine what the next move will be by the central banks of that which is Fed. You can see what other central banks of the world are doing when they are also seeing their but the good thing again that if you look at what happened in UK now, or we see a kind of a moderation in their inflation, just as we saw previously in the month of July for US economy. But now we're seeing another increase in the inflation that also will trigger speculation, which is also going already that Fed may likely increase rates either between 75 or 100 basic points. These are the what is also pushing that sentiment around the world. But after that, the worst performance for a long time in the U.S. market. This morning, as we speak, we are seeing U.S. market. The Wall Street are looking green. I'll tell you that is another thing that you want to consider when you are trading. I said trading news alone is very dangerous. Also, you can see that after that yesterday loss, you can see some stocks are also bouncing back in that market. But as we speak, in Euro market is still also in the red position. Most of the European stock market open lower, at this mid week. Also reflecting what happened and also some also missed earnings and data that also coming in that region also influencing activities there. That's why we are seeing that the market there are also, as we speak now, are slightly also lower. Also, we can see in Asia and Africa, also mixed market. As we speak at this hour, the market here back down here, the NGS is slightly in red. Again, trying to oscillate what we saw yesterday. That mode is what we're also seeing in the market. Crude oil price also responded to the the data that was released yesterday. You saw there was a pullback in oil price yesterday, but at this hour we're seeing a little kind of up retracement in oil prices. But that is not enough to say that yes, the panic has finished. Do not forget that as far China lockdown continue, the fear of recession and also fear of demand also also affecting the oil price. But yet yesterday it closed around 95 dollar after it had touched as low as almost 8 months or 7 months low. The previous week, going below $90. But we're seeing it coming up now. For me, it's also a good one for the oil price. For me, the report that also hit will also give a briefing place again. We'll see another rebound as also the eurozone are thinking of kind of putting a ban on Russia oil. We are seeing a lot of kind of things that will also drive this volatility in oil space, and that will also continue to drive volatility in the global economy and also in the equity market or in investment world. These are things that you should also keep in mind. And also as far as the Ukraine and Russia war or crisis or a conflict, what we call it, is still on. That also has a war so influence. That means any decision you are taking, you need to also stand firm in your decision, and you take what you don't just follow bad wagon. Use your word, use your data and what and the chart to take informed decision so that you will know exactly what to do. Because I believe that there is also potential in the market, even at this kind of situation we are seeing. Everybody is panicking, but despite that, there is still also things that one should look at in the market that also will glide in your heart so that you can take good position to also to stay ahead of the market. Yes, successful traders or successful trading in this kind of current market is about you understanding the chart and also what they are telling you or telling us as a what as trader or investor in the market. When when the entry and exit entry and exit point is also reviewed by this chart and you take action in that direction, I will tell you, you do yourself a lot of good because you are also using that to take what inform investment. What that means to traders and investors is that you must keep your eyes on what on your chart to see where the chart is going, because every chart has a different way of what of reviewing the position of the market or individual stock you are looking at. That means you must understand those patterns and those things that also reveal things to you. Like I said, when you are trading, when you are reading chart, there are found to be what pattern that will be formed in that chart. Those patterns also has some things that you need to look at. Like last time we were talking about the price structure, the money flow, and also the news. But now you look at what is this pattern that I'm seeing in chart. This pattern tells you, okay, it tells you what has happened and also give you a clue what is okay likely to come. That's what the chart pattern is going to reveal to you what has happened to help you what predict what is likely to come. But because I said in contemporary technical analysis and what is happening in the market, if you are using the chart pattern, you will, because it's a it's a top and shoulder, handle and shoulder. Also, it's a invert top, it's invert arm and shoulder, it's a cup and all these ones. These are names, but you need to know that at that particular time, you need to know what is the driver of what of the movement of that stock. That the driver of where is the stock in a particular. That is why volume. I say volume is very very key, because if a chart has formed head and shoulder and you have seen that head and shoulder there, but you need to read the what is the last movement you draw to see whether are they making lower low or higher at that particular time. That means you need to know what is the drive of what of the chart. What that also what is behind that is the momentum which comes with the money flow, the volume, and also the momentum and the volume of that individual equity or the market you're looking at. This will help you to make what informed. So that's why I said trading pattern also is good, but you must understand what the pattern is what also revealing to you, so that you know exactly what to do with that pattern. If not, you will just be looking at the pattern and you are jumping at the wrong time. Before you enter, pattern has turned against you, and you will be oh why? Because you didn't take time to read the state of the market at that particular time. Because it's going to give you a clue what's going to happen. You have seen the pattern of what has happened. From that point, it's going to give you what is likely to happen. That is why you need to know the structure of that the candlestick, the price action at that particular time. Know what the candle is saying at that particular time. What is the momentum? What is the volume? What is the money flow telling you at that particular time? Once you're able to put this together, you're able to also make informed decision. That is how to trade using the chart. Because most people think that using chart is just drawing trend line alone. No, trend line will give you. That's why in our class we know that we consider T T line. That T line I tell you that is what we call moving average exponential, because it's 8 short that it gives you to cut to easily catch what your signals, buy signal and sell signals on the wall. Also know when you want to stay on a long way to take a long profit, for you to maximize the profit. I told you when you are seeing your candlestick or your index action above your what above your T line and you're in that position, it shows that something is good going on. You have to wait run with that wrong position. If unless when you have met your target, or if you want to wait to maximize that run, you wait, because you are seeing that the index action, the price action is above what above the T line. These are things that pattern will let you know. That's why as you are trading or you are looking at the chart, you need to understand what is the pattern and that pattern, what volume and what is the candle, the price structure or the candlestick formation, for you to know exactly what to do. It's not just like I told you last time that when we are looking at price action, we're also looking at time. It's very very key, because these two things will also help you to know exactly what to do so that you can stay ahead of the market. Once you're able to achieve that, you are good to go with your decision. Because trading pattern will go a long way to help you. Because even though you're just starting technical analysis, you need to understand where is the market heading to. With that, you know exactly what to do because it will give you a sign. This is where the market is heading to. That will help you to catch your buy and sell signal or your sell opposition or to hold because you are using to see what is happening in that market. And for that, you don't need to panic once you are able to use it very well. Like I was saying again, that when you are reading your chart, it's about knowing who is in the market and who is not in the market. And I tell you that trading is about what supply and what and the demand. If these are what the all trading is all about, it will reflect on the chart for you to know exactly what to do. That means if you're looking at your chart, you want to look at the market direction. You want to know where is the market is and where it's going. There are forces behind the market, and these forces also help you to review where the position is heading. These hidden forces most times in the market work for both medium and long-term investors, both short-term investor, if you understand how to use these forces. And this force in the market is more of what we call market internals. These market internals measure the supply, measure the supply side and the demand side, and that has to do with what your sellers and buyer. And that also they simply put, when you say market internal, we're talking about what is the word they simply put as market what breadth. That market breadth there, you want to know high no gainers and losers. But that I know high gainers and losers, you need to know what is associated with that movers, that gainers and that losers. Is it on a increased volume or no on a decreasing volume? These are the things to look at when we are using another what we call a market internal, because it's very, very key also to you to know exactly how to use it, because it looks at what are the numbers of stocks moving on what on the uptick or the downtick. But you want to know exactly also the number of stock moving in that direction with a stronger volume or a lesser volume. Because that volume is what when I tell you that I prefer saying that volume is your friend. Yes, in technical analysis we can't dispute it. Trend is your friend, but volume will tell you a lot of story about that. Remember one of the master class I took topic on volume. I told the importance of volume for what for equity investment. That is still there because it has not changed. That volume speak a lot for you to know exactly what is happening in the market. If you know what is happening in the market with the volume, your decision will be guided and you won't be rushing out of position because of what you know. With that volume, knowing that this market internal, it will help you to know to enter a better trade position, or once you enter there, it also help you to know how long you are going to stay, because it will help you to predict the future, and that helping you to predict you can now hold put until you get to where we are going, because that two ratios, what the uptick, the number of stocks that are moving up direction, and also also seeing the level of volume that is supporting that uptrend. You need to know for individual stock and also for the market. That will help you to say, oh, I will stay up in this market. You can see that recently, if you look at the volume in our market, that's also good. And also you can see that there have been a mixed sentiment in the market. Today you see all volume, more buyers and more losers, gainers or no. Also look at the volume. Volume has remained relatively low. It tells you that liquidity is a problem in the market, not really what not about, because there's no much from price are not responding. But we're expecting that a trigger is already underway, and that trigger was one. We have seen how market reacted to US uh, inflation data. We're also looking forward to see our own local market here, the local economy, to see our own inflation report for the month of August. Tomorrow being 15th of 15th of September. If that happens, it's going to shape the market, and that what happened there will also inform you what the MPC meeting will be doing. You can see that after the US CPI, you can see that speculation has coming left and right that Fed will increase the rate by 75, by 100 basis points. All these are what will come, but I believe that for those that know exactly what is happening in the market, continuous increase in rate will agree you want to fight the inflation. That will also lead to what continuous slowdown of the economy. If that happens, there are some sectors that are likely to benefit from it, even when there's no demand for most of the things. Okay, fear of recession, but there will be sectors where because even if there's recession, there are things that will still be happening. That's why you need also to look at your portfolio, to treat your portfolio to a direction where you know that even when there's recession, we're about to see what a recovery in those industry or sector. Even back here, as we speak, that the fear of the MPC hiking rate, if inflation crosses 21 or hit around 21, that fear also for me, yes, it might be there, but I believe that for us in Investdata, that if at the end of the day, facing inflation figure tomorrow, and the MPC decide to to increase rate again for almost a take every time, that will not be too good for the economy. And also, unless you want to look at, you want to create economy that also will automatically go back to recession. We've already seen that rising insecurity and also rising unemployment is as a result of what the economy not also doing well. Yes, the economy remain in the recovering part. We agree, but if it will also further, high rate, and the private sector that also, also contract further, that will might lead towards a bad state of the economy. And don't forget that I've said that in the month of August, we saw that the NPR, which is the Commodity Price Index for that period, also had a kind of a slowdown from almost 53% to around 52 point something. It tells you that yes, the private sector activities also started, kind of contrasting, slowing down, which is not good for the economy. That means, for me, we believe that in invest data, as we speak now, that now is the time for you to also look at some stock to buy between now and what and the next master class, which also we're going to put. Because stock that will take position is very, very important for you, because even as we look forward to see the inflation figure, we believe that the global economy on its own will find a direction to avoid what to avoid the recession. But come back here, we have seen that the economy have remained in a recovery despite on a slow pace. But I believe that the CBN, if they should also jack the interest that I've said earlier at the end of this, seeing the inflation figures tomorrow, that will be three times face-to-face rate hike. That will further what? For me, for that, I believe that it will endanger economic activities and at the same time market stability. For me, I believe that investors should also not worry. Look at the sector where you are. That's why you have to be part of those that are the part of the master class for October 1st. In that class, even when I was discussing one of the speaker yesterday, I've seen a lot of charts he has put down what he has drawn, where the market will, what the market touch, where the market will not touch, where will market touch. If market touch here, it will be send us to a negative zone, where to touch and bounce back, and where it's going to touch up. These are the things that will guide you, so that after that class, you're able to take your decision. I believe that at the end of the day, those talk to position will also be made. But with the knowledge you're going to gather from the training from those speakers, are going to help you to go back and trade with confidence, and go back and trade with what more knowledge, that even when others are panicking, you are not panicking, because you have gathered information and knowledge on how to look at the market better and to get what a good view of the market. Like I always say that when you are chatting and you are always doing price action, you need to look at what time. Time is very key, and that is what I'm going to do most on that day. How to look at time and also look at your candlestick. These are the factors that will help you to make what informed investment decision, so that at the end of the day, your decision will be the bet that will give you more return on your portfolio, because we are all in the market what to make a profit. Nobody is there to look at other portfolio and be no. It is for your own portfolio for you to make good return. That is why you are trading. And if that is the purpose of being in the market, you must maximize that opportunity that you are seeing in the market, where you see that the trade you are is not doing what you want, and it has touched your stop loss. You quickly go out. But if you're in a trade that all the things that attracted you are still in that trade, yes, you can also wait a little time, because it has not touched your stop loss. You are still between the value area of your position, and you see that yes, there's potential that stock will rebound. You can also wait. You will just extend your time. So far, the information you are hearing or what you are reading, the moment you are seeing, and that is also this market market internals are very, very important for you to also understand, because it tells you what is happening down in the picture, because you are seeing the trend of you are seeing the volume supporting the uptick, the movement in that stock. Even the stock is not moving much, but you are seeing the movement, that volume is supporting it. And that means there's activities, and that is also what we send out our sentiment report out on a daily basis for daily market sentiment. For weekly, we do weekly. For monthly, so you to know the activities, the sentiment, the psychology behind what all these stocks. And that is why this internal market data will help you, because you are seeing those stocks that are in uptick or downtick, and the volume that is supporting them. If you are seeing the volume and activities, kind of fund is entering, will also give you a kind of comfort to not to panic. But if you don't know this, and you see as you are jumping out of that position, another trend will come and you'll be complaining that, oh, I thought jump out of this position yesterday. It's because you didn't take time to look at what is happening in that particular stock or in that sector or in the market before you quickly take a jump out of the market. You need to look at this internal market internal, so that it help you to know. And that has to do with what your chart, look at your volume, and look at your money flow. Once you're able to do this, you are able to stand and and take a decision. Yes, today is the midweek. We have seen the reaction changing now in the across the globe. Even when US uh, inflation data beat expectation in terms of being hotter than expected, we also expect that people are taking advantage of what is going to happen in the market and also in different instruments, because not only just stock equity market had that shock yesterday, it was across even the commodity everywhere, because of what the expectation that rate hike again will further kind of reduce their activities. That's why you need to understand how all this work, so that at the end of the day you are taking what a good investment decision to also guide you. Back home here, I want to look at what is happening on the live chart now. What is happening in the market? Market is slightly in red, very, very slightly in red as we speak. You can see that the market is trading around 49,622.82. That is, market is down by 5.63 points, within about 0.01% down in the red as we speak. But the thing is that the market red is also in negative position. We are seeing six losers now against only four gainers, as we speak, on the floor of the exchange as we speak. And if you look at this, it tells you that everybody is sitting on what, on the fence. Why they sitting on the fence? So that they can see the outcome. The cautious trading level that one is still very, very obvious in the market. People are watching to see what will be the the inflation, the data we're expecting tomorrow, the consumer price index for the month of August. That's why everybody's like looking at, let me stand and sit at the fence to watch and see. But people are not jumping into more position, people are taking profits, while some are not looking at, just to look at to see the outcome of the data tomorrow. This is what is why I see that market is a bit dull, and not only in the equity market, across different instruments. If you go to the bond market, look at the fixed income market, all these markets are dull as we speak now. Don't, just because of what they want to look at, the what inflation is likely to look at, because we are seeing that inflation around the Africa country is not so slowing down. And don't forget that we are not playing in isolation. You can see that of inflation figure from Ghana also jumping as high as even getting around 30, almost 34. You can see, but ours for last one was 19 point. These are what we are looking at. If at all there will be adjustment in a rate, I don't know how this is going to be. Is it 25 or 50? Or want to live and see what? But I believe that it is not what is happening in another climate. So you look at the environment where you are and what is about to happen, so that it will guide you to take your. That's why all these are before what the NPC, members, that they can vote and know how to take action and regard to how to put the economy on the what, on the good position of recovering this trend we are seeing. If not, it won't be too good for the economy if we further adjust rate just towards to fight inflation alone. We believe that it's not only the inflation by excess liquidity. This what cause food inflation, and also supply chain problem, which we need to solve. That means here it is going beyond the MPC the policy. You need to also look at the physical and also other measures to address issues that, okay, if we are in harvest period, the harvest period, there are no farmers in the farm because of what insecurity. What number of goods will come from the farm that will make people still, if the smaller food are coming and there's high demand, the price will still depend on, because we are not getting enough from the farm. I believe that you need to address some issues so that we're able to put the economy in the right perspective and also in the right recovery mood, so that at the end of the day, both traders and investors, those and the economy, those companies will be able to expand and employ more to reduce insecurity and all this. So we need to really have a new model, to play forward for the economy and all, so that at the end of the day, we'll find a direction for the economy. But to speak now, as I've said earlier, we have a negative market rate. We're having a six losers and what, and four gainers. Leading the pack of the down side position is Champs, followed by Coronation Insurance, which is a former WAPIC. We can see also FCMB, UBA, ahead of is a markdown. We're expecting that people are also taking profit from moving from around the 7 naira to almost 50, more than the 20 people they declared. Profit taking is expected. We can see that it's slowing down. We can see also Transcorp on that chart. Also Fidelity, that is the six stocks that are on the loser chart as speak at this hour. If you look at the gainers table, surprisingly we're seeing a Unity Bank as leading the car. But Unity Bank, I always tell you that a bank with a negative shareholders fund, you have to be very careful when we are trading. And for me, I will not recommend that stock for any of my clients. And you have to be very careful. Even though it's in the financial sector, please play with caution, because that is how some investors enter Skybank, after the end of the day trading, 4 o'clock, that bank was analyzed, all the investment that you have to be very careful this kind of a position. Followed by Lasaco, assurance. Also we're seeing a NACO and Access Corp on the gainer. These are the four gainers as we speak now. If we flip to the top trade position, which is in terms of volume, we're seeing COVID business solution there. They also followed by Cornerstone Insurance, and the Zenith Bank, Champs, and the GTCO. These are the ones on the volume chart. Also this hour. But as we chart the market, we want to look at what is happening in Zenith Bank. Is it rebounding now? Look at this GT code. Access, result is expected today because they say, oh no, before 15. Let's see or tomorrow morning, but I know before the end of trading today, when I see access result. Today is Wednesday 14. Access, also look at what is happening in access. Look at NACO rebounding fully. We want to know, and also Fidelity after adjusting down yesterday, it rebounded, but still this moment still losing just one kobo. We also look at the state of UBA to see what is happening there. But before we let's look at the general market as we speak. Yesterday we had a little challenge with our software we are using. It was slow yesterday. We have to call the up or the other from another platform. But today I think it's okay now. Let's look at what is happening in the market. Let's look at the MACD, take money flow, and our T line. T line is very key. It helps us to know how long we're going to stay. Even when you take your buys, your buy signal and sell signal, even want to stay long your profit, it will help you. When you have to take profit, T line will also help you to do that. That's why this T line you need to understand how to use it, and that's why also you need to get our Investdata technical toolbox. All these are also explained in that video so that it also helps you to take informed decision. But also most of this also will be also detailed, how to use them in the master class coming up. That's why you need to take advantage of the discount of 15% to register on or before what 20th of September. Today is already 14, so that you can take advantage of that window and also register on time. Yes, as we speak now, we're seeing that the market is also below the T line marginally. You can see, but we need to call to zoom it because market is slightly also start trending at the same time in that at this point now you need to see what is happening. You can see that market is still start trending until market break out to cover this candlestick. That's why price structure is very very important. The point there of price action. You can see this the loss that brought the market to where it is now. Until market will able to recover this and break it out, that is where we'll not say yes. And at the same time, break out the T line, that will not say good. Market is also looking up. But to speak now, market is trading below the T line. You can see it on this chart. But I believe that as we go closer to or after the MPC meeting, seeing a position for what for the Q3 number, because that will give you instant position where you're looking at. And I believe that that will be at the point we will also be seeing the PFS coming back to the market. As speak now, they are not in the market. That's why market is dollarizable. When seeing that the strength of the number, if the number maintains, the a complete action maintain corporate earnings maintain the what we saw in Q1 and Q2 and Q3, we'll see a better number. That will also add the momentum to the market as liquidity will come back from the big players, the smart money. That's what we expect. But as we speak now, the market is still below the T line. But if you look at the indicators here, the momentum indicators and money flow, we're seeing also that it's confirming that market is slowing down already. We're seeing a red position for sure. And if you look at MACD, this histogram here, it's already telling you that market is also crossing to become bullish, bearish, sorry. And money flow has also crossed below 60 down after touching almost 53.55 yesterday. It's reading now around 57. It's a sign of weakness, and that is also yesterday that it was a missed market and marginal gain. This morning you can see confirming that people are still not taking position to see outcome of MPC. To see the state of the CPI reports tomorrow from Bureau of Statistics. That will also go a long way to inform decision of market players at the end of the day. For that, let's also keep our finger crossed to what you can see that on the 1 hour, on a day chart, market is slowing down below the T line. That's the situation I want to watch. But if you look at the the 1 hour chart, 1 hour chart is not coming up yet. Why? Okay, let's look at those stocks that we mentioned. See chart to come up here now. Let's look at Zenith Bank first. Okay, yeah, Zenith Bank. Can see Zenith Bank chart now up now. Can see on the 1 hour chart is below what the T line. But one thing is like it remains bullish on the momentum indicator, the MACD and also flat forward for the money flow on 1 hour. Let people look at what a day chart is talking about. Yeah, good. A daily chart is also repeating the same pattern, but a day chart is also normal front entry marginally. We're also seeing MACD here. MACD here is also bearish already, and the stock is trading below the T line. As far after testing the T line, it's still below the T line around 20 2005 and between 2005 and 19, 1998. 1998 is the price, but let's keep our finger crossed for Zenith Bank. Let's look at GT code. These are the financial stock that that no that got declared dividend yesterday. People have started receiving their dividend alert for Zenith Bank. Today also Red Star has been marked down for dividends of 7 kobo for today. Price that are adjusted. Yeah, if you look at the life of GT code here with this chart, it's still trading down. Trading down, but you can see it's not just trading slightly below the T line on a day chart. But money flow is also looking up gradually to read around the 48, 45, 48 good, not strong, but it has not reflected on the price of the stock as we speak. We're seeing a missed MACD is not really bullish, not bearish, but money flow is looking up for that stock on a day chart. If you look at the 1 hour chart, still trading below the T line here, and money flow is looking down on the 1 hour chart. That is also cause for concern for the stock as we speak. We'll quickly look at what is happening in Access Corp. Access Corp on 1 hour chart, yes, it's a bit below the T line. It has gone up, but below the T line now around 8 naira 92. It has gone almost 9 naira today. But let's see how it's going to close. We are seeing also MACD trying to become bearish on the 1 hour chart. Money flow looking at slightly for Access. We'll look at the day chart for Access. The day chart for Access remains strong, good, and fine for the stock. But if you look at momentum indicator, it also started slowing down again. But money flow is streaming 63, strong up, but I can see a little slow on momentum, which also a sign also for weakness. But as the result will determine where it fire from here today or tomorrow if the result hit the market and it beat expectation in terms of performance. I know that for the entry dividend, we expect much from 30 kobo from there if they sustain what they paid last year. But I believe that the result in the nature or the state of the result determine how far the stock will go from here. Let's look at NACO as we speak. Now you can see positive day chart for Access Bank, which is good. These are what you look at for you to hold your position. For Access, it's a place to hold. No need to panic. Hold your position in Access as we speak now. Let's look at NACO. What is happening in NACO this hour? NACO is slightly on top of the T line. Yeah, we're seeing the money flow looking up to lead around 38, 36, 38. Then MACD is positive. You can see it here now, but still need more strength to confirm. And this for a day chart for NACO. For me, you have to also be very careful for this airline related business because of the high cost. I think the activities in that industry has slowed down because of cost of living and all those stuff. Also to look at how the numbers are going to come out. I always tell you that the price of equity feed on what feed on earnings, and this earnings is what will also drive the psychology and the sentiment, and the attitude of people in that stock, the perception they will have for the stock. Earnings is very, very key when it comes to equity investment. On a 1 hour chart for NACO is still looking down or looking down, looking down. As to speak, money flow is looking down, while MACD is slightly bullish on a 1 hour chart. But finally, let's look at what is happening in UBA. UBA, let's look at UBA. So speak now. UBA on a 1 hour chart, I will tell you, no, it's not looking too good. It's still bearish. Yes, despite the 20 kobo declared on a 1 hour chart. You can see it's trading slightly below the T line here as we speak. Money flow is down, reading around 38 again as we speak, and money and the MACD is still bearish. Let's go to the day chart to conclude the live class for today. Yes, on a day chart, we're seeing that there's a pullback, almost three candles down here, and I can see it here, back here, but still not below the T line, just trading above the T line. The price goes around there, around it's doing around there 740, 742 to speak now, but still above the T line. Yeah, MACD look still bullish, looking at the MACD indicators still strong. And money flow is also strong, in around the 80. Good, but does not make a reward. Once they cross the T line, but we have seen a sign. For those that enter even below around 7 naira at 755 taking profit, I'm not surprised. That's why we're seeing a little report. For those that are in daily dividend income investors are still advised to hold their position, to take over ahead of what ahead of the full year, knowing that third quarter position also give you the state of these banks and where what you should expect at the end of the day. I believe that the dividend policy of this bank also want to also support their price at the end of the current financial year. It depends on your investment objective. I always say that that should also guide you when you are taking decision on what to do, when you are trading. Yes, feel free to subscribe to our YouTube, where you can have access to updated information there. At the same time, ask question on any other platform. Go to our site, also have access. And also, as I've said earlier, take advantage of what of the discount, and also prepare to improve your trading strategy using the contemporary technical analysis, and also at the same time what is happening around the market now. How can you take advantage? How can you also hedge against inflation? Because in this like inflation, you need to know the kind of stock price position and why you're there. Even when the market is oscillating, don't be afraid, jumping in and out, panicking in and out, because that will also cost you another money by what cost of transaction in and out. You need to know exactly what to do between now and the end of the year, especially also what you are looking to see at post election. Because I tell you, Nigeria will have elections, of election before now. We know what happened after successful election. I will tell you the tension in the economy now, apart from what economic activities and security, for the election, I will tell you for me it's okay. We have not seen such a kind of even the calm, relatively calm. We believe that what we saw during the presidential election for each party. We have seen it sustain that peaceful atmosphere. If that is maintained, then we're going to see a better political environment. That also will attract inflow if we get it right. Pick a leader that also will come with reform to put the economy in the right perspective and right direction. Yes, I'll say thank you here. See you tomorrow. Enjoy the rest of your trading day.